Welcome to the Trading Justice Podcast. Today's episode is called The Magnificent Few, because right now a handful of mega caps giants, names that we're all familiar with, are holding up the market while an increasing number of stocks are flashing breakdown patterns. With tomorrow's CPI numbers hitting, we're going to dive into what this divergence means and how the gap could vary between these two areas of the market even wider. We're also going to play a fresh round of Stock It or Drop It. We're going to answer some listeners' questions. But before we get into all of that, just want to preview some big news. On August 18th and 19th, we're hosting our Master Trader event for pro members. We're going to teach some of the foundational concepts. We're going to go over a lot of charts here in the podcast. We're going to teach you how to read those charts like a pro. To become a successful trader, you really need some of those foundational technical skills. And you can grab a free pro trial from us today. You can hit that with the link in the show notes and hit that like and subscribe button while you're at it. Matt, it's good to be back on the podcast with you. How are you, my brother?
Doing absolutely fantastic. Excited to be here on the podcast. And yeah, we've taken a couple days off the podcast. There's no doubt about that. We enjoyed a little bit of a vacation from the podcast in the summer, and we're back live on our YouTube channel. We're going to be doing it every single week on Monday afternoon, Monday evening for those of you on the right coast there. And speaking of Master Trader, before we do that, make sure to hit that like and share if you don't mind. But Master Trader next Monday and Tuesday is going to be awesome, awesome, awesome. We're going to be teaching technical analysis, trends, pattern support, resistance, candlesticks, the set method, entry, stop loss targeting. Also going to get into indicators in day one. And then on day two during Master Trader, we get into a little bit of application case studies from day one, and we get into basic options as well. So definitely come join us, pro members. And if you're not a pro member, this is a great time to become one. You can hit the link in the description below when you're watching this week.
You know, tomorrow, Matt, is the CPI report, and we're going to dive into that. We're going to dive into the technical divergence. But before I get into that, you're my earnings guy. I joke all the time. There's a couple of titles I give you. You're my AI guy because of your knowledge of AI and how ahead of the curve you've been. But long before you were my AI guy, you've been my earnings guy. And, I don't put the emphasis historically on earnings that you do. And I rely on you for a lot of the data. But even for someone like me, man, the story of this quarter has been earnings. And so that story can change, right? Economic data, CPI, we'll see how the story evolves. But Matt, as I've been following the newsletter over the last, 4 weeks or so as earnings season has unfolded, these numbers, even to a layperson such as myself, have just been impressive and been the story and the resilience of this marketplace. Matt, what are some of the numbers that really stand out to you from this really powerful narrative that's unfolded?
Well, if it was not, I'll just say this: if it was not for this earnings season, we would be talking about the SPY like we're going to be talking about the RSP here in about 20 minutes, because this earnings season has not only offset some of the concerning macro conversations. The market is not even really given attention that much to the macro conversations, because every time the market would get concerned about anything on the macro side, well, here's another positive guidance report coming out of your favorite tech stock, or here's another massive beat coming out of your favorite comm stock, or whatever the case might be. And so this earnings season, I don't think people understand how important this earnings season was to the current conversation everybody's having in the S&P 500, whether or not we're going to see that breakout against the all-time high pricing. And because you've had some concerning economic situations, you've had a mixed conversation on the central bank. You have mixed conversations all over the place from a geopolitical perspective. You have a tariff conversation where the landscape is quite frankly constantly changing, to the point where now we're obviously negotiating with individual companies on the tariff side of the equation, not just countries, but individual companies within the S&P 500. I'm looking at you, AMD and NVIDIA, for example. And so there's been a lot of mixed data, I would say, in the broad market. And I do think when you're looking at, say, RSP, the Dow Jones, when you're looking at the Russell 2000, you obviously see that mixed data play out. But then when you look at the SPY, you're at the all-time high. You're talking about a potential breakout this week. And if you get a positive reaction to the CPI report tomorrow, well, you could be off to the races here. And so why is that the case? It's not because of the macro, it's not because of the tariffs, it's not because of anything on the macro side. It's because the quality of what is real to the market. All of those macro conversations, they're real for a moment, and then the market
Yeah.
prices it in and they move on. What's real is EPS beats. What's real is where EPS is going into the future. And this is the third consecutive quarter that the EPS growth rate has achieved double-digit growth mark. But it's the first quarter that was not expected. When you dealt with the fourth quarter of 24 and when you dealt with the first quarter of 25, the growth rate was expected. When you started earnings season, it was going to be in double digits without some absolutely cratering situation from an earnings perspective. They started EPS growth at 8%, at 9%. And when you understand the low bar expectations on earnings, that's a guarantee we're going to get into double digits. That wasn't the case this go around. We currently stand at 11.8% on EPS blended growth, which is what the most important number to the macro earnings conversation is. But we started that at 4.9%. And so you had a 4.9% expectation for EPS growth. You're finishing earnings season with 11.8%. That's on the back of an 81% beat rate against EPS, which is outstanding regardless of the low bar expectations. And of that 81% beat rate mark, they cleared the bar by an average of 8.4% against EPS expectation. So when you wonder, how do you go from 4.9% to 11.8%? It's on the backs of an 8.4% average beat of EPS expectation, which is near the high point of the last 5 to 10 years. And so just the EPS story alone was such a fantastic story. And when you look at the kind of the saga that gets told through earnings season, week one is all about the banks, and the banks got on base. They did their job. Week two was all about kind of the Teslas of the world and the kickstart to the growth, the Googles of the world. Google got on base, did what they did. Tesla had a negative earnings report, but you saw blended growth go up a little bit. But then you get the Max 7 week, and that was last week. And you really, not last week, but a week and a half ago, and you saw this big jump up in blended growth from 6.2% up north of 10%. And that's all Max 7 coming
Yeah,
through.
Max 7 delivered. Point
Oh,
blank, end of
then
story.
some.
They delivered.
And then some. And so the EPS story that the market told in earnings season was an extremely positive story for earnings. But it wasn't just the EPS story. Guidance was pretty positive for the market as well. And Mark, when you think a little bit about guidance, this is how guidance works in when it comes to earnings season. Guidance is always going to be very low coming into earnings season. You're going to have more S&P 500 companies report negative guidance than you will positive guidance. But coming out of earnings season, we have that script flipped. You have more positive guidance coming out of earnings season than what we expected going into it. And when you're looking at the guidance, I'm trying to look at FactSet's earnings analysis here. I'm looking for a chart on the specific guidance situation because I found it extremely compelling regarding the guidance
And Matt
storyline.
doing this is why he's my earning guy, because I don't want to peruse through all that data.
Oh,
You
I
know,
look at this data every week, like legit,
let Matt do that.
legitimately every week. So when you look at like EPS growth, for example, comms came in at 45% today, Mark. That's on last Friday. To kickstart the earnings season, they were at 29%. Real good beats out of comms, real good beats out of tech, real good beats out of finance. Those were the three best sectors, quite frankly, from a totality of earnings perspective. When you're looking at, say, the worst sectors, energy, staples, materials had terrible beat rates throughout the season. Profit margins, good on tech, good on finance, good on comms, good on those ones. Bad on staples, energy, healthcare, discretionary came in line. Specifically, here it is right here. So guidance, Mark, 25 guidance here. So look at industrials, 7 negative, 4 positive. Consumer discretionary, 7 negative, 2 positive. Materials, 5 negative, 1 positive. Tech had 24 positive guidance reports, only 6 negative guidance reports. That is why tech is a standout coming out of earnings season. And quite frankly, why we're talking about having a positive earnings season in general. And so I just felt like from the EPS beats to the percentage beat to the storyline that gets told through earnings season with the banks to the Max 7, it was a very compelling story throughout the entire earnings season. Every single week it improved. Every single week I think you got more confident from the fundamental perspective. But yeah, I would give it a B plus. Expectations were a little bit down coming in, and they cleared the bar and then some.
Yeah, and I think it's important. And one of the reasons we spend some time at the start of this podcast before we get into some of the charts, right? Because it kind of tells the story of the divergence we're going to talk about. And it's also the backdrop, no matter what happens with the CPI tomorrow, no matter what happens with macro news that might create headlines in the coming weeks, this is a really positive backdrop, particularly for those areas of the market. I actually saw healthcare up there as like the third rank on a couple of those. I found that interesting, despite its spot on the chart. But comms, big cap tech, those semiconductor companies, that's a real positive, no matter what happens on the headlines. A little confidence to buy dips that might occur, or confidence to play
Well,
breakout patterns that might develop.
yeah, I think it gives you confidence. I mean, the market will navigate the market technically, but the earnings season gives you confidence in the fundamental condition of the S&P 500. Yes.
Yeah, and yesterday we were meeting with the team, Matt, and both of us unscripted called tomorrow's CPI report the most important CPI report of the year. We were talking with the team. We meet with the team every Sunday, evening, afternoon, depending on where you are. And, those tech companies, and we're going to talk about this more in Divergence, but I'll just mention it here. Like some of the companies that just did fantastic might be a little more immune to that CPI report, but a good chunk of the market, this report is going to matter.
Like, I know why you say that, but why do you say that?
Because the earnings were so resilient, and because the nature of the type of companies that are carrying the market. I was trying to find a more clever thing to say than the Mag 7, the magnificent few, if you will, right? I think they carry on their AI narrative. I think they carry on other narratives. If inflation comes in a little bit hot, if yields go up because of it, there's been evidence the last couple of years that those companies are very immune to rises in yields, which would likely occur under a hot inflationary scenario, where other companies that maybe don't have as robust of earnings are not. But when we're looking at the CPI tomorrow,
Well, can
there's
I
a
add
couple of things
that?
of course.
Well, just to kind of go on, because I think that's a very important point, Mark, and it kind of goes to the divergence we'll talk about here in just a moment. But if you'll recall, there's been a market in not so recent history where you were concerned about elevated inflation with the slowing growth conversation, correct?
Mm-hmm.
And that market was the 20 was what year? What year was that market?
2023.
Okay, so you had the 22 going into 23. And in 22 going into 23 here, you had the S&P 500 go up, 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 right? You come over here to the Qs, and in that same time frame, what did we see the Qs do? Up, 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 up. But when you go over to the Dow Jones, the diamonds, what did we see the diamonds do? Flatline for the first 6 months. And so SPY up, Qs up, Dow flatlined, IWM flatlined, the cyclical areas of the market flatlined. And so when you talk about the ability for the Mag 7 and the leadership of the market to withstand negative conversations in the market, well, that's not just a random thing. For the first time in human history, in my opinion, the 23 market was the market that showed that the biggest companies in the world with the largest moats in the world in times of economic concern or stagflationary analysis, they are winners in that environment. Would you agree with
In
that?
fact, Matt, in our programming, I remember with our pro membership during that time frame, we would joke almost on a daily basis that the Mag 7 and tech was the new defensive areas of the market, that they needed to redo the sectors, right? You had utilities, you had staples, but your defensive area, and we make that joke all the time because the price action
Apple
was
became a defensive stock because for a year straight, everybody just talked about how they had $200 billion in cash reserves and they could handle any negative economic impact. And so money flew into those companies because of the large moat. And I remember saying many, many, many times in that environment, large moats play, large moats play, large moats play. That's that's a scenario that could happen coming out of the CPI report, in my opinion. So I think it's something to keep an eye on. By the way, we're starting to see it already on the divergent side of the equation. So I kind of feel like the CPI report tomorrow is in my estimation the most important. I know we've called it the most important CPI report this year. I think it's one of the most important economic reports we've had so far this year.
Yeah, absolutely. And maybe not for 5% of the stocks, right? Whom I
No, I,
think
I,
just
I
are,
think Mag 7 is going to play regardless of the CPI print tomorrow.
yes, and in fact, and we'll, in some of the scenarios, and we'll play them the divergence. But let me save that for a second. But Matt, going into the tomorrow, like sometimes you can see in the estimates of the CPI kind of what the market might be thinking, right? They'll throw out a low ball number, or they'll throw out right, and you can kind of get a guess of what might be coming. This one's a little all over the map, right? They put the month over month headline number as a little bit lower. They put the core number a little higher. They put the year over year number a little higher than last month, right? And so kind of a mixed bag in their forecast of the numbers. What do you make out of that?
Well, I don't think you are right. Oftentimes you can see through the expectations kind of who has an edge going into a big economic week. I don't think that's the case with CPI here. Last month was 2.7. The expectation is 2.8 on the year over year. I think that's the most important number that we're going to see coming out of CPI tomorrow, by the way. You got core expected coming in at 0.3, non-core coming in at 0.2. Like those aren't, if you're thinking about the expectation game, I don't think the expectation game is built for the Bulls or the Bears this week. There's pretty mixed on the expectations, I would say. What I will say is the year over year number I think is going to be an anchor tomorrow. If we come in at 2.7, 2.8, so we come in line or we come in where we were last month at 2.7, I think that almost solidifies the September cut. I think it almost
Yep.
solidifies the December cut as well. I think you could basically put in cement two cuts coming through the rest of the year. If inflation comes in underneath on core, you might get three cuts by the end of the year. And so I just think this is one of those situations where an economic report is going to help us understand the path of policy. And I haven't talked about the path of policy a lot while the Fed's been in a pause, because what's the path of policy? Data driven, data driven. Let me sit on the fence a little bit more, Mr. Powell. Data driven. I need to see more data. I need to see more data. There's not a path of policy conversation there. The path of policy is when you expect the Fed to start doing things differently. And about 3 weeks ago, I wrote an article in the Tackle Trading newsletter. Definitely check that newsletter out. If you're not a pro member, that's worthy of the sign up for a free trial itself at Tackle Trading. But in the newsletter a few weeks ago, I wrote about this concept of when the Fed should start embracing a cutting cycle. And what I basically said is September's a live cut. And this was before all the Fed from 7, 8, 9 trading sessions ago. But in terms of that September, I thought it was just so important to get the Labor Department numbers. When we got the Labor Department, man, I was solidified on a cut for September. And so if this inflationary print comes in under expectation, you got a slowing growth argument with inflation on path. That is lights on for the Fed to start a cutting cycle. And we're not, and I mean a cutting cycle, meaning we're going to get more than just the one cut in September. If this was just a conversation over the one cut in September, I don't think the market really necessarily cares about that. But if the Fed's going to be looking to cut in September, October, December, type timeframes, that's going to be very, very interesting. So I just think the stage is set for the path of policy to get solidified here on a miss. I think the path is 100% solidified on a miss. If the CPI report comes in hot, you might be seeing rinse and repeat 23 markets.
Yeah, no, I mean, and that's the thing. If CPI comes in hot, you can expect yields to take a jump. You can expect mega cap to overperform. You can expect everything else to underperform, and depending on how hot, there's some
well, because the market is pricing in a cut in September. I mean, that's
right now
5% right now.
And you're going to see some real interesting price action in different areas in the market, Matt. And I want to talk about these divergences that are occurring because entering this week, reading your technical piece at the start of the week, just looking at these patterns, I'm like, well, this is the story in the market this week, right? I have equal weighted indices trading in a consolidation go or don't pattern. Mega cap tech, their charts look great, right? The S&P 500 and the Qs look great, right? I got no issues with those charts. But some of the other, areas of the market, Dow, Russell, your average stock in those, big indices, they look like they're vulnerable is probably the best word. And if you don't get a positive reaction tomorrow in your average stock as measured by RSP or QQQE or small caps, right? You could be looking to get some corrective behavior in those areas of the market. Which is why I think both of us are on board. New one up it. One of the most important economic reports of the year. I really can't push back against that. But Matt, break down.
But more important one.
Yeah, I can't off the top of my head. I like to push back just because I like pushing back.
One economic report this year where I thought the path of policy was going to get solidified. I think that's the case coming into tomorrow.
And so, talk about these divergences and let's go through some charts to illustrate what we are seeing, because I think this is the most important story of the market this week, and it's a technical one.
Well, divergence is a very interesting term for description of how we describe things that don't make a lot of sense in the market sometimes. Like when you're looking at some price action, like, oh, momentum's there. But then when you look at your indicator and it doesn't confirm that, that's divergence. And so divergence is when price is doing something and another asset or an indicator on that asset is doing something differently. And divergence is not a, oh my goodness, it's a bearish argument, or oh my goodness, it's a bullish argument. It's an, oh my goodness, we have mixed data. And as that data becomes solidified, you usually will see some momentum come out of that. And so divergence usually is a precursor to some degree of momentum condition in the market, because sometimes when the spy's lying, you got to reprice that to a certain extent. And so what I was talking about in divergence, and I want to give a couple different examples of divergence, but what I was talking about specifically with divergence was I was looking at the different indexes, and I was looking at the SPY. And obviously, when you look at the SPY, we have a bullish uptrend, and we're kissing up against the ultimate highs for the year, for the all-time high. And you look at this situation technically, and I think you get a little bit excited about a breakout against 640 on the SPY. And there's a lot of different patterns that can develop against the all-time high here. Number one, a high base would be a beautiful pattern going into a potential breakout. A reset cup and handle where you come back down, increase in support, and then reset that distance going into the breakout. Because right now, Mark, the market's kind of tired going into the breakout. And I know that because the last time we ran from 620 to 640 before it tried to break out, it came right back down to 620. This time we go from 620 to 640. Well, you're a little bit tired there. You've kind of ran that same distance. And if you understand potential average yield, a lot of times you're going to see that short-term reset technical pattern to give you a beautiful little breakout situation. So when you're looking at the market, I think you got to be ready for a breakout. And if we get that tomorrow, I think you got to be happy we get it tomorrow. But I do think the best pattern going into the SPY breakout would be either a reset against support or a high base and simple consolidation going into that breakout. Now, that's the analysis on the S&P 500. It's pretty straightforward. It's
Now,
a
Matt, and I love charts like this as a credit trader. There's so many ways for it to play out. Like from a bull, like, oh, you can break out, you can do one of the
it's
various
a bullish
paths.
conversation.
Like it is a total bullish
Yeah,
conversation, and
regardless of however you what strategies you apply or your techniques, or it's a bullish
yeah,
conversation.
I mean, I love these charts. Like, I mean, just from a,
It's
from
a
a, I
simple
have a
technical
wide
conversation
variety of
to
bullish
understand,
credit.
honestly.
They're fantastic charts.
Yeah. Now, when you
Now, the
come,
other set of charts you're about to look at, I hate. I
well,
would not sell credit with your money on these charts.
yeah, you would.
No, I wouldn't,
Yeah,
because
you would.
I hate this chart.
You're gonna have to
I
pay for
hate
those
it.
steak dinners here somehow, there, brother.
I hate it. I
Uh,
hate this chart.
by the way, are you ready to are you ready to declare
Matt and I have a bet.
dinner
Okay, so Matt and I have a bet that one Fed speaker will join the Bowman Waller chorus and unequivocally call
before
for
the
rate
September cut?
before the September cut? So somebody has to basically come out and say, "Yep, I support," not the wishy-washy. I'm kind of leaning, maybe.
Oh,
No,
oh,
they got to.
I see how you're kind of changing the parameters here
Well,
a little bit.
that's the do. I check the
Yeah,
tape. That's the bet,
gonna
right?
play those
So
lawyer tricks like I can. But Mark, when you're looking at the RSP, and again, when you look at SPY and you look at RSP, they're a completely different technical picture. So the S&P is a clean technical backdrop of simply understanding slight overextensions going into a breakout. Would you agree
yep.
with that? That's kind
Oh
of
yeah, I know.
the whole S&P 500 conversation. Nasdaq's not too dissimilar from
No,
that.
I know. Seriously, as technicians, as trader, all you're doing when you look at those charts is you're just debating. Okay, I would like this path, or I would like this path. What would I
Right.
prefer? Right?
Now, if the S&P was doing the exact same thing as RSP, what do we have? We have a left shoulder, we have a head, and we have a lower threshold of support that is confirmed on a right shoulder. That is called a head and shoulders
No,
formation.
in
And then
technical,
the bodies are very clean on the neckline. You have a couple different necklines you can process here, but both of them pretty clean on a potential
I think
violation.
technically that's called gross. Like
Technically, it's called a head and shoulders formation
it's
with slowing
gross.
momentum. It's honestly pretty textbook here on the head and shoulders formation.
Yeah, it is.
And when you're looking at a head and shoulders formation, you get a little bit concerned against the backdrop of the market. It's more of a neutral conversation, I would say, with a bear lean. When you're dealing with short-term head and shoulders formations, it can obviously confirm to the bull side. If you break back up above the right shoulder, that's a really good
It's a
technical.
real. It becomes ungross real quickly.
Oh yeah, it's really good. That's why it's not necessarily a bearish conversation, but the pattern development is bearish. Does that make sense, Mark?
No, it does. It is
Because you
not
have a longer term uptrend that offsets the development. That's why it's neutral.
gross is not bearish. Gross is just I don't
Gross
like
said you
this.
wouldn't make a bullish trade until you get confirmation.
Yep.
When you look at RSP, you're basically thinking, oh, yeah, Jesse Livermore said don't take a trade without confirmation, because confirmation is your projection and is your insurance that you're right on your projection. Well, if you're telling me that the market's going to break out, well, if we were looking at the SPY, I'd be like, yeah, you got a stock, get it now. Like, yeah, 100%. It's bull on bull conversation. When you're looking at RSP, I'm saying, no, it's got to get above 184 and a half first, because the technical backdrop is substantially different when you're looking at RSP. And for those of you, when you watch this podcast later on and you're like, oh, yeah, of course, RSP is different than the SPY. Well, they're not. They're the same 500 stocks. The only difference is the weighting criteria of SPY is weighted to those big mega cap darlings, and they are holding up. And so when you see the S&P 500 at a high point, and we're talking bull on bull crime, but you see the RSP in some degree of bearish reversal situation, well, it's because you're having a divergence conversation in the marketplace. Most of the time, people think about divergence simply as a price to indicator analysis. Divergence can be a lot of different things. For example, the dollar and gold. How much analysis do I put on gold against the dollar, Mark? Like, it's because those are divergent asset classes. And if everything was healthy in the market, you wouldn't be divergent on RSP versus SPY. SPY would be outperforming because of the Max 7, but it wouldn't be divergent. For example, Mark, in the entire recovery saga of Liberation Day recovery, there was no divergence there. RSP was recovering. Dow Jones was recovering. IWM was recovering. SPY was recovering. Qs were recovering. Everything was recovering. You're on mute, by the way. Everything was recovering. But ever since earnings season took over, well, guess what we have? We have a divergence conversation. And so, yeah, I thought it was very important to understand this conversation, because if the only thing you look at is the spiders, you're thinking it's giddy up, go, go, go time. When you look at the RSP, you're like, oh no, there's a little bit of divergence there.
No, I mean, because tomorrow, let's say we get a negative market reaction to the CPI report, and let's say the S&P is holding up, right, and RSP is breaking down. You know what your CNBC headlines are going to be tomorrow? Markets do nothing. I mean, that's what all of the headlines from the financial markets doing nothing when you
That's
actually
the only
have.
thing the market takes into account is the SPY.
Yeah, and so when you're actually having something very interesting happening, right, in that situation, or you could have the opposite happen, right? Let's say we get a positive,
The
and let's say,
market, I'm not saying this is going to happen, Mark, but the market's it's in a better bearish situation right now than it has been since the recovery started.
oh yeah, absolutely, 100%, without a question. This is the best technical
I have
pattern.
not entertained a bearish argument in months.
Yeah,
In
no, this
months.
is the best
Every
technical
time they
pattern.
talk about it, I'm like, no, that's for somebody else. There's some
And this is why the CPI tomorrow is so important. If you get a positive reaction in everything else, you could break above that resistance. No harm, no foul. A little crappy gross pattern for a
not
few
only
days.
no harm, no foul, but I would be expecting momentum there, and we have not had
Yeah.
momentum since early June.
I mean,
Early
you could
June.
see us. Yeah, you could see a situation where the SPY does nothing tomorrow in both scenarios. One scenario because you're breaking down in everything else, and the SPY is holding up.
X7 covers a lot of hills in the market.
And the other scenario where everything else is rallying, and the bit Mag 7 takes a day off, right?
Yeah.
And so, this is the story in the market, right? And you
It's
see the QQQE, the RSP, all your equal weights.
yeah.
You can see it in the small caps. You can see it in the Dow Industrial, right? This is the chart. These are the charts to watch tomorrow. These are the charts tomorrow morning. And, I threw out
To
a
me,
scenario to you,
it's
Matt.
not if the S&P is breaking out tomorrow. It's just if RSP is breaking out of 184. If or 184 and a half. If RSP is breaking out of 184, we might be seeing some momentum here. See, that's how I see the divergence. I don't see the divergence through, oh my goodness,
Yep.
bearish, bearish, bearish. I see divergence very similar to how I see symmetrical triangles, to where in a symmetrical triangle, you have this pinch going on, right? And when you get through the pinch, you oftentimes have volatility. And a recent example is Tesla. You have this pinch here, you have this symmetrical triangle here, and guess what? Once it breaks out of the triangle, look at the momentum there. And so I see it through that lens, where when you do see divergence, yes, you have some concern on the backdrop of the market when there's divergence between SPY and RSP, but I see it can get resolved to the top side too. And if we get a negative miss, we get a miss on CPI tomorrow, meaning it's underneath the expectation, then B, RSP is above 184. Market can have momentum. And I think that's very interesting. And so, because the path of policy conversation, because divergence can get alleviated, I believe the CPI report is the most important economic report we've had on the docket this year. And that's tomorrow morning.
Yeah, pay attention to those levels. And if you want a technical breakdown, because we've been detailing this for our pro members since Friday afternoon, right? So our pro members have had days and days prepared for this, really important technical situation. Sign up for that pro member. You get a 10 master trader here in a week.
Yeah.
You get the fantastic newsletter. We prep these before they come.
There's not a better trading community than what we do at Tackle Trading, period. And
all right.
One last thing on divergence, just very quickly. I know you want to keep your schedule. Divergence happens indicator to price too. And when you're looking at RSP, Look at the story that is being told. And I'm going to teach this next week in Master Trader. I just want to highlight it here. Left shoulder, head. Price goes up. Indicator does what? Go down. When price goes up, indicator goes down, the technical spidey senses need to get raised, because the overall price is, you're not seeing what you're seeing on the price sometimes. Indicators got to converge. And ever since that divergence on the indicator mark, that divergence has done nothing but got worse. In fact, now we're not divergent. We're just confirmed on the downside. So, by the way, what this also means is if we do break back up, we got a lot of room to run.
Yeah, no, this is a really, really important technical
Very
battle.
important next 24 hours in the market.
Now, the Bears will probably blow this like they've blown every shot they've had, but this is one of the better setups. Well, this is the
Well,
best setup they've had.
if the Bears get a moment, they'll have a moment, and then at the 200-day moving average, we'll have a different conversation.
So
They don't get a lot of moments. They don't get a lot of those.
So all right. Well, I think if they win this moment, they win the 200 too, on RSP, not in mega caps. I don't, that's a whole different thing. That's a whole different thing. So, and then we'll be doing a lot of review of the 2023 charts.
Listen, if we see NASDAQ up, RSP down, I'm going to tell you what the topic is in the Tackle Trading newsletter.
2023.
It's going to be a reliving of the 23 environment, because stagflation, here you come.
Yeah, absolutely. You ready to do stock it or drop it, bro?
Heavens yes.
All right, stock it or drop it. Here's your parameters.
Team, you guys play with us in YouTube. Stock it or drop it.
Stock it is you really like it. And I don't care what time frame, but you got to really like it, not marginally. You got to really like it for a trade, really like it for a position hold, really like it for investment. I don't care what your time frame is, but you got to really like it, or you just drop it, you pass. Right? I'm going to give you some ticker symbols. There's your parameters.
To a technician, that gives me way too many ammunition to say,
dude, I'm in a really good mood to give you a lot of parameters to do whatever you want. I'm going to start with AMD. AMD got told by the mob boss they got to pay 15% of their revenues on chip sales to China, right? Listen, and when the mafia comes knocking on your door and says, listen, we're going to break your windows and break your legs, you're going to give us a cut of your revenue. You know what you say? Yes, sir, I'm going to give you a cut of our revenue. So AMD, right?
I've seen The Sopranos. I know how it works.
And so AMD is going to pay 15% along with NVIDIA of their chips, certain chips to China, right? Tried to run not a lot of price action on the news, but you commented even on the gap down that you liked their earnings. So stock it or drop it, Matt. AMD, which has been on a monster tear.
I'm going to have to go ahead and say stock it on AMD. And again, this is not necessarily a technical conversation, although technicals are a little bit shifting volatility post earnings. But I do see it through a bull lens. It's just a matter of where is that development. But AMD is becoming a competitor to what NVIDIA is doing, specifically in China. And I see it as a winner that AMD just got into the same headline and same fundamental concern that NVIDIA has been living in for 2.5 years with China. And so how is that not a positive for AMD? But on the earnings side of the equation, I thought they had a wonderful earnings report. Really good beats across the board. Didn't pull off the hat trick, but guidance was perfectly fine. They had to charge off due to the China restrictions of a few billion, and that kind of was the gap down. But from a fundamental perspective, if AMD sets up, and there would be no hesitation on a trade on AMD.
All right. So when you tell the mob boss no,
AMD would not beat NVIDIA or some other AI names for me on the investor side, but
that's not the game. The game isn't hedge your stock it or drop it. You're stock it or drop it.
Listen, NVIDIA's there.
All right. So when you tell the mob boss no and they break your legs, well, you got to get some food ordered, right? Give me DoorDash. Give me Dash, right? Another stock that's been on an absolute tear, another stock that recently had earnings, another stock that pulled back a little bit post their earnings. Stock it or drop it. DoorDash, Matt.
Well, when I wrote quick hits this week in the newsletter, have I said, guys, you should be reading the newsletter every single week? But when I did quick hits, oh yeah, there it is. Dash beat by 54%. One of the better beats on EPS in the quarter. We talked about it as a gap fill. This would be a stock it on a swing trade.
All right. Stock it on a swing trade specifically. Stock it on a swing trade specifically.
I don't
Next,
have an opinion long term on Dash.
super microcomputer SMCI, right? A couple companies pulled back, some of them recovered. Super micro, which is a very popular trading stock, very popular cash flow stock for some, did not recover on their earnings. Stock or drop it at super micro.
I think this is drop it time on super micro here. I thought their earnings was absolutely garbage, and I thought the market got it right. I see this as a 200-day moving average story, so I'd say drop it.
All right, listen. Sometimes when you're a bad boy, you get called into the principal's office. Intel, give me Intel. CEO got called into the principal's office today. Trying to
A
play
couple
this case.
days ago, wasn't it?
I think we got called out a couple days ago. He got called
That
in
was a
the
couple
office
days
today.
ago.
I think he visited the
Did he
White
get
House.
called stupid or something? Like,
But I got called in. Listen,
I
and
called a
so
couple names. Yeah.
so Intel, Matt, has been in consolidation pattern for the length of Moses wandering the desert. Stock or drop it, Intel.
Uh, I would have to say drop it on this one. It's just gonna lose against so many other semiconductors. Like don't get me wrong. I get into a bottom feeding the same way everybody else does, and who doesn't like a value deal? And Intel, you would think at a $60 to $70 cost, 2-3 years ago, they might be a little bit of a value deal. I don't see that. You're going into the age of AI, and you need to get a lot better and a lot quicker if you're Intel. They got some dirty stuff to clean up, and their earnings report recently was absolutely garbage. And Mark, when you don't have a PE ratio and you don't have a PEG ratio, and your forward PE ratio is north of the Empire State Building, and your Intel, which you're a value company in the semiconductor space, nah, nah. You would think you had more value at $20 than you did at 60. You would be wrong. Drop it. Easy drop.
All right, next one, Adobe, ADBE. Melius Research today came out and downgraded it from hold to sell, arguing that the AI-driven multiple contraction phase is in the early innings for software as a service companies. Really big call by Melius Research, highlighted Adobe stock or drop it. Do you agree?
100% I agree with this. Adobe's got to get better at the AI development side of the equation, and they're going to basically get to the point where they're not even an interesting company.
Yep. Well, that is a drop it with gusto. Matt, what is the thing that companies do that
By
is
the way,
unique?
I am a consumer of Adobe. I use Adobe on multiple different levels. I look forward to the day where I don't have to use Adobe, and
Ah,
that's a problem for Adobe.
that is not a good thing, reflective of their trend.
Adobe, a consumer, just gave you a bad report. Just saying it.
All right. What's your thing that you hate when a company does the most?
What?
So I've heard you complain about this. What causes a trader to lose trust in the company more than anything?
Report earnings off schedule.
Give me AI. Announced preliminary financial results today. Boy, if you were not prepared for that, a little forward guidance. It's just decided, hey, it's Monday, August 11th. Nobody knows it's coming. Let's announce preliminary financial results and a restructuring of our global sales and services organization out of nowhere. Market
Bad
did not
decision,
like
C3.
regardless of what the numbers.
C3.
So I know it's an easy drop it, bro, or is it?
It's a
Or
company
is
I
it?
like.
Yeah, I know. That's why
Yeah,
I
it's a company
thought
I
it would be
like.
an interesting because it's a company it's a company a lot of individuals like. Obviously, doing a no in reporting out of the blue, stock it or drop it. C3AI.
I just give a quick PSA to the companies.
Yes.
You're not getting what you think you're getting by pricing in a negative earnings report in 2 sessions versus one. You're just not getting what you think you're getting. What you're getting is your traders to hate you, to not look at you, to not care about you. And you know what? I'm out. They're off the watch list. I'm kicking it off. I'm kicking them off the AI watch list. I'm kicking them off my personal watch list. I don't trust companies that do stuff like
There
this.
are companies that
When
when
you're
they
in a
do,
trade,
yeah,
you're making every decision. You're taking into account all this information. You're trying to understand the return versus the risk, the probability, the landscape, the environment. You don't
I
need
mean, you think about this on a Friday.
additional
Let's say I owned AI and I'm in a
reading
downtrend.
nonsense out of the corporation. That it's just nonsense.
I mean,
It's
let's say
absolute
I'm in
nonsense.
AI on a
No
Friday
viable
afternoon,
reason to do it.
and I'm like, okay, I should probably buy a put or do something more aggressive. I'm going to wait till you break short-term support, and then I'll do something. And then you wake up on a Monday, and all of a
I'm
sudden,
not an investor in C3. If I was, oh Lord, that letter that I would be writing.
it's just
Oh my goodness. Nah,
all right.
that's not cool, bro. That's not cool.
You have long ordered.
To
Final one
screw
on stock or drop.
to screw over your own investors.
I know.
To absolutely just screw over your own investors that can't call or covered calls, that can't add protection on a company that you absolutely buy protection on earnings, Mark. This is not your favorite food-based company. This is an aggressive AI growth name. And you just basically said to every investor that is in your company that you need to grow your company. We don't care about you. Well, guess what those investors are going to do? They're going to have the same reaction that I'm having right now. Bye.
Yeah, like it's just not cool. It's just not
Drop
cool.
it. Drop it
Final
like
one
a
on
rock.
stock or drop it. You have long argued that Tesla is not just a car company. You've been making that argument for I think since the origins of Tesla.
It's 2012.
Yeah, I mean, like that it's not a car company. This is something different, blah, blah, blah. Interesting little news, bring it up. Shares were up today after Tesla submitted a request for an electricity license to the British Energy Regulatory. It proved it would allow Tesla to supply electricity to British households and businesses and compete in the UK energy market. I just found that when I saw that, I was like, oh, I'm going to do stock or drop it, because another example of Tesla not just being making four wheels that drive.
Somehow you made one of the most interesting companies the most boring utility electric company. Like somehow you
Oh,
just
look at those utility charts. That's not boring, bro.
somehow you just did Elon and Tesla
Have
dirt.
you seen people's power bills
Not
lately?
talking about XAI or not
That might
talking
be their
about
best revenue source.
You're not talking about automation or robotics or any of that. Mark's like, what's the most fascinating thing for me with Tesla?
It
That
is. Well,
they're going to
today.
get into utilities.
No.
They're
Listen,
going to
have you
help the UK out with their utility bill. I'm like, okay. All right. Based on the utility segment alone, stock it. Add on top of everything I add, this is a $7 trillion company in 7 years.
All right, let's get to Coach's Corner, wrap up our
Has the
podcast.
potential. Robotics and automation alone. That
Don't
gets
bet,
ugh.
don't bet against Elon. Don't
Listen,
bet against.
just wait till you have Optimus in your room doing your dishes, bro.
All right, got a couple questions on Coach's Corner. First question, right? And always feel free to email me at Team of Tactical Trading, hop on our Discord, send a question, right? We're always looking for questions to take. Something we do in our lounge segment for pro members live every single day. First question. All right. So this question is a long question. I'm going to paraphrase it. All right. So the individual has bought shares of Albertsons. I don't know how many, but we'll just assume even blocks here for the purpose of the question. So ACI and what they're, Albertsons been in a little bit of downtrend. Along the way on the downtrend, they bought a protective put, right? They bought a protective put along the way. I do not have the date of that put, but it's not relevant to their question. So they own the shares and they own a put. Their question is they can no longer get premium on covered calls at the strike price that they were selling, right? And so at that same strike price, trying to get credit is just not there. It's not practical. And so they're looking to roll the call down. Now, the question they have is how far can they stretch the rules that they have for rolling the calls over? For example, can they go above 50 days for a call? Can they reduce one or two strike prices to get credit in order to get it a little bit lower? Should they wait until the put expires, or should they just exit the trade altogether? Right. And so this is a situation. They own a put. They were able to get credit on covered calls. They no longer can. And so they're looking for your opinion on different options here.
Let's handle the put first.
Okay.
The put should have absolutely nothing to do with the decisions you make on the call. Would you agree?
Yes.
The put was there for insurance purposes for earnings, is what I believe. Okay. Now I could be wrong on that, but I'm
no, but that would make sense since earnings were last week. That would make sense that they sold
it
the
wasn't
call
last week, but it was like
I'm looking at a weekly chart. Excuse me.
a month ago.
I had a weekly chart on Albertson, so yeah.
It was at like the second week of earnings. Yeah. And I don't know what the duration of that was. This question was from Tomas in Discord, and we're answering it here on the pod, Tomas. But what I would suggest is the put option doesn't really play a role in how you're trying to manage the call side, because the put option is there for protection on the earnings or the downtrend. And so you're going to manage that based on like for example, if you bought that put option in front of earnings, you were most likely out the next day after earnings. You got the downward pressure on price. And even if you see further deterioration in price, volatility is going to go down as well. And so you're gonna want to get rid of that put option fairly quickly, in my estimation. You might want to reload on like the next pullback situation, but that's only if you're going to consistently do covered calls and try to average down as the market's going down. So the put option is not really going to play a role in the conversation on the call side. Now, if I do understand the question, the ultimate question was, how far can you break rules to fit a scenario? Correct?
I think that's the general, right? I think that's the general gist of it.
So for example, on Albertsons, and I'll just go to the current pricing, but it'd be damn hard to roll these options here, right? Yeah, there's no bid. There's no value to these. There's 4 days left, and Albertsons has intrinsic value at 32%. That's not what their options read. Their options read like they have intrinsic value at about 22% right now. You go out a little bit more in time, you're still going to run into those same issues on the weeklies. You've got those same issues here. And so there's on Albertsons here specifically, you went from 22 to 19, even coming out 38 days. Let's go to the Delta Gamma here. There's just not a lot of bids there, Chucky. Not a lot of options for you there. And so you come out to a little bit more time, you can start to see it come in a little bit. But that's basically Albertson saying no more covered calls. Would you agree with that?
Yeah, no, I'm trying to just think through. One of the things that
This is a very unique situation on
it's very unique, and I've actually been in similar situations before. How I have handled it is the first time I've gotten a support level that's formed. Let's say you get a multi-week support level. Let's say you come down to this recent support level, you trade sideways for a couple of weeks. I will take the put off and monetize it and only put it back on again when support breaks, right? If that makes sense. So you start to get a support level, I take the put off, and then that allows me to reduce my cost basis tremendously, right? Because I've made money on the put and I can sell, calls at a lower strike price. But
after the earnings event, you're going to manage you're going to want to get out of the initial put initially, but on the next development of a technical pattern, you can certainly reload. Mm-hmm. But on the call side, if you run into a situation where you got 7 days left in the contracts and you can't roll it to 30 days out because there's something you're not picking up the premium.
I really don't have any problem locking in longer credit, and this is from someone who
that's where the question is how far out will you go to find that credit?
Yeah, as some I love selling weekly or bi-weekly, but there are times there are times and there are situations I will find myself in where I'm like, shoot, I got to go out 50 days. I got to go out 60 days to lock in that credit.
I went out 90 days before.
Yeah. So as long as the credit is good. Now, if I'm only picking up $10, I'm not doing it, right? I got to pick up a credit that's worth locking down a little bit longer time, right? And so,
Unless it's a longer term investment, then it doesn't matter what the premium you're getting.
you
Like,
know, and so, but there's some thought, complicated situation, unique situation. Hopefully that helps, Thomas. And if it doesn't, pop in the lounge. We'll talk some more.
yeah,
Uh,
but Tomas, the one thing I'd say is again, you're going to manage the put differently than the call. On the put after the earnings event, you're going to want to get out fairly quickly if you're not exercising your put option to sell your stock, and then you could reload at the next available option when you get a good pattern. Obviously, a 9 EMA bounce is one of those patterns. On the call side, you can go out as far as you need to, but again, I think 90 days is kind of the max. And by the way, if it's a retirement account, that's not nearly as abnormal as you would think if you want to maximize range and never have any degree of taxable situation.
all right. Next question. Two more questions. Next question. I find myself in a weird spot in my portfolio. Some of my stocks are doing great, but others not. Is this a common scenario investors run into?
Yes.
Yes.
Yes. Yes, and yes.
If
But what
RSP breaks support, it's going to be a lot
it's
more
gonna be
common.
even worse. Get ready for that worse if that occurs. Um, I would say it's probably a little bit more right now, given the fact that we are seeing divergence within the backdrop of the market. And I hope that the conversation we had on divergence today helped you understand that. Because sometimes when you're looking at the market at an all-time high and your 401k is not at an all-time high, you're like, what the heck's going on? And oftentimes you got to ask yourself, well, what are you in? And the simple reality is when you're seeing divergence on the RSP versus the SPY, that divergence is far worse when you look at the SPY versus the Dow Jones or the SPY versus IWM. Um, I was just comparing SPY versus SPY, equal weighted versus non-equal weighted. But yeah, it is normal to have winners and losers. There's no doubt about that. On your winners, let them ride. On your losers, learn how to sell a covered call.
Yep. That's like, it's always tricky when you're in this situation
I,
because you
I
have to.
I assume that was a longer term investor conversation.
Yes, it was not a trader. It was
Yeah,
these are my holdings, right? I mean, because I mean, and this is where having a skill set, and this is one of the things we try to help our pro members do, because there's stocks that you're going to want to let run, and others that you're going to be playing defense, and right, and having the skill set to do that, right?
yeah.
It doesn't come by accident. That's what we do with our community on a constant basis, giving them. And it's another reason to attend Master Trader next week. Final question.
Yeah.
Day trading question for you. And I got a kick out of this one because I have started to dabble in day trading, but can't decide on an intraday time frame. Any suggestions? And I just started laughing when I read the question because I'm like, oh, like,
Every
okay,
time
ask
frame.
5 day traders and they're going to give you 5 different
Every
answers on
every
what you
time frame.
should do.
Every time frame.
You
Every
know,
every
because
single
I
time.
have my preference, you have yours, but any suggestion on them helping them find theirs?
I was literally talking to a bunch of day traders today. There's probably about 20 of them. And Mark, if you asked every single one of those traders, what's your favorite time frame? You're going to get probably 18 different answers. Like because day traders like to let me make fun of day traders a little bit because speaking as a day trader, um, day traders like to think they're unique, precious little snowflakes, that they
Mm-hmm.
have their uniqueness, they have their specialties, I have my unique system. And it's like, no, you're doing the same thing everybody else is. So best time frame, favorite time frame, that's going to be a very subjective conversation. What I will say is, there's three time frames that you anchor to as active traders, day traders and swing traders specifically. And day traders and swing traders are very, 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 they have a lot of commonality to them. You have your three time frames, but without getting in too much into the weeds, we'll just go on two time frames. So you have a one time frame where you look at trending analysis because there's an old rule in the market that says you always want to trade in the direction of the trend. Well, for me, the direction of the trend, the direction that I want to trade is always done in the direction of the 1 hour time frame. As long as that 1 hour time frame is bullish, I'm going to be looking at bullish patterns. In fact, I've talked to many day traders in many streams, and they're like, "Yeah, I'm shorting the market. I'm shorting the market. What are you doing?" I'm like, "Not shorting." They're like, "Why?" There's a good breakdown. I'm like, "Yeah, it's a high quality breakdown, but you're trading that breakdown on a 5 minute chart, and that breaks rules for me on my 1 hour time frame. So I have to trade in the direction of the 1 hour time frame, or I have to be analyzing a reversal. Like if I'm not going to trade in the 1 hour time frame, the 1 hour time frame better be in some degree of reversal for me. And so the 1 hour time frame is a very important time frame for me because that's determines the trend. And then I look at like pattern development on like a 30-minute time frame. And then I look at triggering mechanisms on depending on the volatility and the time of the day on a 5 minute chart or a 15-minute chart, depending on if I wanted to be a lazy day trader or an active one. And so everybody's going to be a little bit different. And so when I'm teaching people how to day trade, it's really about assessing who they are as a trader and then building the systems that they're going to need to rely on around who they are. Because Mark, if somebody's going to tell me, "Hey, listen, I got 1 hour to trade in the morning," the system I'm going to tailor to them and their primary time frames versus their execution time frames are going to be a little bit different than if you say, "No, I want to learn how to enter in trades during the Japanese Open and carry them overnight to the New York Open." That's going to be a little bit different. And so there's not one answer fits all here. But what I would suggest is your longer time frame, trending time frame, pick a 30 or 60-minute chart. I know some awesome day traders that will do time frame analysis, trend analysis on 4 hour time frames, for example. But just say an hourly chart, just 1 hour chart, you trade in the direction of the trend. And then on execution, pattern development, say 15-minute trends, 15-minute time frame. So a lot of what I'll do, Mark, is I'll identify the 1 hour trend line, trend. As long as we're above that trend line, I'm looking at the bullish side of the equation. So, like for example, on the ES here, Mark, that's a 1 hour trend there. That's a 1 hour trend here. And earlier today, I was looking for a short-term reversal on the 15-minute chart at that level. And you know what I'm looking for right now? That exact same thing. And so you're on the 1 hour trend line here and here, which means I'm going to look for pattern development there, and I'm going to look for pattern development here. By the way, I literally said earlier today with a whole bunch of other traders, don't take that long here, not when it's going to come down to 63.90. I said 63.90 between the hour before the close today. I think I said 63.90 like 15 times. Like, just be patient, wait for 63.90, wait for 63.90. We got it. Now you're starting to see that reversals take hold. So I'm going to look at that 1 hour time frame, but then when I'm getting into the nitty gritty of pattern development and reversal analysis and pivot points and entry levels and all of that, I'm going to break it down on the 15-minute. And you see here, you got a nice little W formation, little bit of, it's different because we had the futures reopen here, but you got a good consolidation and you're starting to really kind of build that consolidation for that break back up going into the Asian session. And so, and then when a lot of times when I'm looking to actually execute entry stop loss management, I'm going to be on my on the 5-minute time frame. And so, like, I do all my levels and trending analysis on the hourly charts, sometimes the 30-minute chart, pattern development. When I'm asking for my patterns, it's usually on a 15-minute chart, unless I'm very aggressive on the scalp side. Then it's more on the 5-minute chart. Execution time frame for me is a 5-minute chart.
Yeah, great. Listen, Matt, it's been a great podcast. Let's talk about Master Trader. Send us out.
Well, if you liked anything about anything I just said regarding the multiple time frame conversation, well, you know what we're going to do? We're going to do that in Master Trader as well. I think I deleted the Master Trader thing. But the link is in the description below. We're going to be teaching Master Trader next Monday and Tuesday. Master Trader is the foundational class at tackle trading. It sets every education funnel at tackle trading. You want to learn how to trade futures, you start with Master Trader. You want to learn how to trade options, you start with Master Trader. You want to learn how to do covered calls, naked puts, credit spreads, you start with Master Trader. You want to learn how to day trade, guess what? You start with Master Trader. Master Trader is the foundational course. It's available to our pro members for absolutely free. It's a class we do, and we do that because we want our pro members to really kind of navigate the world of trading and investing with that same degree of foundation that we have. And so we teach it once a month. It's available to all pro members. And so if you are, thank you, Frankie. And so if you are not a pro member, it's very easy. You can sign up for a free trial this week. You can get access to the Tackle Trading newsletter this weekend. You can test out Coach Frank and Coach Greg's analysis and trades that they put into the Traders Report every single weekend as well. So you get to test out the Traders Report, the Tackle Trading newsletter, and then you also get to come hang out with Coach Gino and myself in Master Trader next week. And so sign up, free trial, register for Master Trader in the link in the description below. And let's start this together, this journey we call trading together. And with that said, I hope everybody has a wonderful, wonderful rest of your day. And if you're watching the podcast on YouTube live, yes, we kind of just decided very last minute to do it live on YouTube. We're going to do it every week live on YouTube, guys. So we're going to do this podcast every Monday right at around 6 p.m. Eastern Standard Time. And so if you want to set that calendar, come join us every Monday afternoon as we record the Trading Justice podcast, and it will be available on every app later on this evening as well. And if you are watching it on YouTube, kindly, please give us a nice little like and share. Help us get that visibility out of all goodness called tackle trading. With that said, Mark, final thoughts.
Yeah, listen, just have a great week. Watch those levels. It's a very interesting technical situation on those equal weights on small caps on the Dow. Watch those levels. Keep an open mind.
I like the reversal level at 6,400. Just want to throw that in.
All right, everyone. Have a fantastic week, everyone.
Later, team.